Hi, this is Mark Item from HONU Trading with a 2-minute drill for Saturday, May 20th, 23. This one for the bulls. Education only. Job 1 is always risk management. Follow me on Twitter at HONUMGMT, at HONU Management. And if you find this valuable, take a moment to like and subscribe. Okay, let's run the 2-minute drill. So today's agenda is a bullish case. What if? What if SPY breaks to the upside? Now, the market climbs a wall of worry, and there's a lot of bricks in that wall, yet all those bricks are known. Debt ceiling negotiations, interest rates ticking higher, the banks, the bread, war in Ukraine, inflation is sticky, Fed's tightening, yada, yada, yada. A long time ago, and I don't know who said this, but it's a classic marketism, what the market knows isn't worth knowing. Again, that's already factored into price. So I want to introduce two concepts, RSI ranges and measured moves. Then ultimately we want to talk about the question, in evaluating a trade, risk management is job 1, how will I know if I am wrong? Okay, let's play one for the bulls. Let's go bulls. So here's a chart of NVIDIA, and first I want to introduce the concept of bull and bear ranges in the RSI. This was developed by Andrew Cardwell, who built upon the work of Wells Wilder, and he found that in a bear range, RSI overbought is around 60, oversold can be well below 30. So here, NVIDIA declines, and it actually drops a little bit. This somewhat works. You're never going to catch the low, but when it flips to a bull range, breaks above 60, and then oversold in a bull range is around 40. So in this case, the bull range didn't work. It basically is a scratch trade. Then the bear range definitely didn't work because we didn't get below and stay below 40 very long and quickly reversed to above 60. This is why it's so important to know when we're wrong. This one didn't work. But this is a great example of what happens when a bull range can work. Now, if I'm just looking at traditional overbought, this is overbought up here, and anytime I get a sell signal, great, that's just in time for a further move. So this is what we're looking for. Now, the concept of a measured move, here NVIDIA ran this far over this amount of time. So if it starts to break higher, it could conceivably do that again. In this case, it's already gone higher. So that's the concept of a measured move. It's amazing how often that actually happens. So the critical issue is we look to employ this in SPY. How will I know if I'm wrong? So here's the daily on SPY. And as you can see, we had a measured move. We went around 36 points, and almost all of that happened during the first month. We've basically gone sideways since then. Down, back up, but with no real progress. And while the RSI has not broken and stayed below 40 very long, it hasn't gotten above and stayed above 60 either. So if I look at this on a weekly chart, here we're looking at same thing, hasn't gotten above 60. There's my measured move. If this were to work, great. That could take me from the 420 level to 455 or 460. And that's not at all impossible. So how will I know if I'm wrong? If a breakout turns into a fake out. So if it drops much below 415, great. This didn't work. I'm out of the trade. I'm risking 5 points to make 39 to 40. I take that trade any day of the week and twice on Sunday. So as my buddy HONU says, small losers win.